Good morning, everybody. This is the live market open for May 3rd. It's Wednesday, as usual, and I'm Yohay Elam of Forex Crunch and Market Movers podcast, doing the show as usual for FX to Read. We have a very busy show today. As usual, we'll cover the recent developments in markets, talk about charts and levels in our technical segment, discuss the upcoming events, focus specifically on two events: the Fed decision today, this evening, and the non-farm payrolls on Friday. And then we'll end with the currency of the week. Sorry, we'll not end. Continue. Our currency of the week is euro-dollar. We'll discuss 4 factors moving euro-dollar. Then talk about the week ahead and wrap up the show as usual. Your questions, as always, are more than welcome. If you can't see the chat box alongside the screen, please go to the address here, tlk.io/fxread-forex-live-video. So let's begin. The week began with, May 1st celebrations in many countries, but in the US it was busy, and the US government averted a shutdown. So in Congress, politicians managed to reach an agreement, good morning Ed, to avert the shutdown. That was good news. That was positive for the US dollar. This news helped the US dollar against the yen, but the picture is much more mixed against other currencies. We'll see the charts soon. In general, there's tension towards the Fed decision today and the non-farm payrolls on Friday. Of course, optimism towards the French elections. Polls in France have been relatively stable, relatively steady, around 60% for Macron, the centrist, and 40% for Le Pen, the extremist. So there was some kind of an erosion, but nothing that would be really, really scary. Regarding Brexit, so there was a meeting over the weekend between UK Prime Minister Theresa May and her European counterpart, Jean-Claude Juncker, and according to reports, it was a disaster. So that's not really good for the pound, but we haven't seen big moves. Good morning, Jax. Good morning, everybody. And there are some kind of, some signs of a slowdown in China, according to the PMIs, the official PMIs, and the unofficial, the independent Caixin PMI. So that's a reason to be worried, but, not so much at the moment. And oil prices, they remain depressed. We'll see the charts soon. In terms of data was not good from the United States. US GDP missed expectations, rose only by 0.7% annualized, and 0.7 annualized is only 0.2 or even less quarter over quarter. We already knew that it would be weak because durable goods orders released one day beforehand were weak with 0.7. Another miss came out from the ISM manufacturing PMI early this week, which is as a hint for the non-farm payrolls, came out at 54.8, and the Fed's favorite inflation figure also was down. Not unexpected, it was fully expected, but it came down to 1.6. So we have quite a few figures in the United States which were off the mark, okay? So outside the United States of America, we had the ECB decision on Thursday. The ECB, the European Central Bank, was happy with growth, but cautious on inflation. We had quite an interesting move there on euro-dollar. But then the day after the ECB, we learned that inflation is up, higher than expected in the Eurozone. Most importantly, core inflation is the strongest since 2013. Okay, so nearly 4 years of subpar core inflation. It's still subdued, but it's moving up 1.2% on core inflation. GDP figures we'll have more today, but in Spain here where I'm sitting, GDP came out better than expected. I must say I can see it on the streets. And in France it missed a bit. In the United Kingdom, Brexit begins biting 0.3%, but elsewhere, that was more or less as expected, a small miss. UK manufacturing PMI yesterday was, came out a bit better than expected, but it's a small sector there. Most of the economy is services, 80% or so. Canada's GDP missed. So we had lots of GDP figures. And as I mentioned before, the Caixin PMI in China missed with 50.3. So that means that Chinese manufacturing at least is growing a bit more slowly. And New Zealand employment, which we had last night, that was not a miss. That was a beat. and it came out better than expected. The unemployment rate in New Zealand fell to 4.9%. Good news, and we'll look at the chart soon. We'll see that the Kiwi is standing out. Okay, so let's move to the charts. This is our technical segment for major pairs in the first week of May. Let's look at the charts. So we'll begin with euro dollar. Euro dollar, here we are. You're seeing the screen in purple, and that's because we are in an uptrend channel and it continues working for the euro. Okay, so let's zoom out. No video or sound. Maybe refresh the screen. Let's see, maybe refresh. Here. Sorry. Okay, I hope technical issues work. I hope everybody else can hear me. Anyway, talking about euro dollar. Euro dollar is trading in an uptrend channel. We can see higher lows since the beginning of the year. So refresh the browser. Yeah, hopefully this works. Anyway, euro dollar is trending upwards, trending in an uptrend channel. Higher lows since early in the year, since 103.40, and higher highs along the way. We're currently in sort of the higher half of the uptrend channel, and let's look at the levels. Of course, we had a Sunday gap last week thanks to the French elections. So the levels I'm watching on euro dollar. To the downside, we have still 108.70, which was the high in December 2016. To the top side, we have 109.50, which was the high level following the French elections, even a double top. Okay, if we look a bit down, we have 108.30, sorry, 108.20 working as support. It's the post-French elections low, and to the top side we have 109.50 and then 110. Okay, we'll focus a bit more on euro dollar in our special currency of the week segment. Let's move to pound dollar. Pound dollar, of course, enjoyed the British elections, the announcement. Currently 129.13, resistance 129.65, followed by the very round number, of course, of 130. Support at 129. Further support only much lower at 127.70, which was the post-elections low. Okay, dollar again. Here we are seeing the strength of the US dollar. No need for safe haven currency after the French elections, after the US government averted a shutdown. Currently 112.07, resistance, well, at 112.20, a recent high. Further up, we have 112.50 and 113, support 111.60, which used to be a double bottom, triple bottom, weaker at the moment, and of course support at 110 and then 109.50. Dollar CAD, also a big mover. It's not about the dollar's strength here, it's about the Canadian dollar's weakness because of oil prices and because of Trump's talk about tariffs against Canada on lumber, timber, softwood, dairy products, and issues with the Canadian housing. Anyway, currently 137.24, the highest since February 2016. Last year's support at 136.35, but we're on a higher ground. Further support 136 and 135.40, but we should look even higher. Moving to the daily chart, as I said, highest since early 2016. So the next line of resistance here on dollar CAD, 138, followed by 138.55 and 140, the very round number. Let's move to Aussie dollar. Aussie dollar is sort of trending lower, but it's quite choppy. So currently under 75, support 74.40, further support 73.75. We haven't been at that level for some time. Resistance 75.60 and 76.10, which was first support, then resistance. Kiwi dollar, here we're seeing a bounce from the lows. So the pair found the low here at 68.50, but currently challenging, getting closer to 70, not there yet. Resistance 69.70, further resistance 70.40 and 70.90. Support before 68.50, we have 68.80. So Kiwi was on the back foot, but bouncing. And dollar Swiss. So here we are at 99.13, 99.60 resistance, followed by parity, and that is followed by 101. Further resistance 101.70, support 99 and 98.20. So this concludes our technical segment for the majors for the first week of May. Sorry. And now let's move to the crosses. So this is our technical segment for lines of support and resistance for crosses. Begin with the Euro Swiss. Of course, it jumped on the French elections, so we had it rising because of the rise of the euro. Swiss National Bank maybe took advantage of that and pushed the pair even higher. So 108.20 is the current level. Further resistance 108.70, but before that we have 108.50. Support 107.70, 107.60, very busy there, and for much lower support 106.25. Euro pound here at 84.50. And also here we had, of course, a weekend gap a week and a half ago. Support 84, a veteran line worked in the beginning of the year, followed by 83.30, and very closely followed by 82.95. To the top side, we have 84.80. Okay, recent line of resistance, 85.30 and 85.80. Okay, so well, I would say we're still a bit range bound, trading a bit lower in this range. The Brexit pair got a bounce from the lows thanks to the French elections. Well, but before that, it fell lower because of the UK elections. Euro yen, quite a roller coaster move there to the downside. We found support at 114.80, moved back up 116.24, 117.40, 118, 118.80, 120, 120.50. Currently, we're at 122.40, resistance 123, 123.30, and 123.80. So quite a roller coaster over there. I see the questions. I'll finish this segment and I'll answer. Pound yen 144.80 at the moment, which is just below resistance, a line seen back in December. Further resistance 146.80 and 148.50. Support 142.80 and 142. And after that 140 and 138.60. So we had a few boring days or boring weeks with pound yen, with the dragon, and now it's shooting its fire once again. And we'll conclude this segment with the price of oil. So we're getting close here to this triple bottom support at 47. If we fall below 47, we have 44.50 and 42. Resistance 49.50, 52, and 54.50. Okay, well, 55.20 is also worth mentioning, but oil is on the back foot. Too much oil sloshing around. So this concludes our technical segment for crosses and oil for the first week of May. Let's see here a question by Ed. Let's read it. We have euro dollar gap unfilled. So long, and we might have a double gap play after the French elections, but the second gap could be either way. I've not seen an FX and double gap, nor historically can I find a mention of such an event. All technicals are out of the window until we get a big reset, so fundamentals lead the euro dollar, and techs are not reliable anymore. Even pivots are screwed out of play. Best sit on the hands and watch. Big boys will whip and retail FX lads this election. Well, regarding the election, it's basically priced in that Emmanuel Macron will win. That's a euro positive outcome. It's not fully priced in because after Brexit and Trump, nobody fully believes the polls, but the French polls have proved themselves very, very, very reliable, amazingly reliable, I would say. I believe you could have another small gap to the upside, but not huge. If, of course, Marine Le Pen wins, that will be a huge shock. Then we'll have a huge gap to the downside, maybe even below parity. Okay, so it's really very, very asymmetric. Okay, so I believe we could have a very small gap because of course elections are held on Sunday. Voting ends at 8 p.m. It's a very binary result. We've seen that the exit polls were very, very correct. So I want, regarding the election, if we already mentioned that, exit polls in France use a different method than in other countries. They actually count real votes and use them as exit polls. They use, I think, 500 polling stations, so that's quite a bit. And they take the first 200 votes counted. And they take the votes that close at 7 p.m. local time, and then they publish on television the results at 8 p.m. And it's not the first time they're doing it. They're using the same system since the 60s. Each time it's getting better. Exit polls, I think, showed Macron with 23.7%, and the actual result was, I think, 23.7. So quite amazing. Anyway, they got everything very, very correct. So, but 8 p.m., maybe 9 p.m. That means local time, 8 p.m. GMT, which is 6 p.m. 8 p.m. local time, 6 p.m. GMT. We'll already know the results before markets open. So I'm sure we'll have a gap on Sunday. But if Macron indeed wins, it'll be a small gap. It won't be that big. And it might be a gap in comparison to the closing on Friday, of course, but not necessarily new levels, not necessarily above this high of 109.50, if indeed we close under 109.50. So let's say we close at 108.70, we could see a gap to 109.40, and that's it. But there's so many events until the close on Friday, so anything can happen. I don't think it'll be a big whip. If we have Marine Le Pen winning, that'll be a big whip, of course, for everybody. Yeah. Okay, I hope this answers the question. And now, yeah, let's talk about upcoming events. Just a second. Take a very, very tiny break, just a moment. Okay, I hope you can hear me. Let's talk about the upcoming events for this week. So it's quite a busy week from today and the next days. So today, just after the show, we have the construction PMI from the UK. That's sort of the least important of the PMIs. Yesterday we had manufacturing, tomorrow we have services. Then we have Eurozone GDP, the first estimate. It's expected to show accelerated growth, 0.5%. Sort of confirming what Draghi said, better growth prospects, inflation not so good. Then we have big hints towards the non-farm payrolls, the ADP NFP at 12:15 GMT. I must say that after a few really good months of forecasting, previewing, being the oracle for the non-farm payrolls last month, it was a total disaster. Then we have the ISM non-manufacturing PMI, the services sector in the United States, of course, the most important sector, more than manufacturing. So this should also give us a hint for the non-farm payrolls. And the Fed decision at 6 GMT, we'll preview that soon. But in general, there's no press conference, no forecast, no change expected. Everything depends on the tone for June. Will they raise rates in June or not? What kind of hint will we get? Will we get any kind of hint? That's what matters. Tomorrow, echoes from the Fed, of course. Australian trade balance for those trading. The Aussie services PMI from the UK at the same time, 8:30 GMT. At 12:30 GMT, we have Canadian and US trade balance figures. Sort of a choppy time for dollar CAD factory orders. And we have a speech by Mario Draghi at 4:30 GMT. It might be a non-event, but he might really rock the euro now that he has more figures about growth and inflation. Okay, so watch out for that. And the big day is Friday. Of course, well, for those trading the Kiwi after the recent rise, we have non-farm payrolls at 12:30 GMT. Sorry, New Zealand inflation expectations, and the big event is, of course, non-farm payrolls. We'll preview that. In general, we're expecting a return to normal, about 200,000 jobs gained, 0.3 in inflation. So after a weak month in March, a report we received in April, now we're expecting good figures. Beware of trading dollar CAD because we have the Canadian jobs report and the week is not over. We'll have Stanley Fischer, number 2 at the Fed, the vice chair, speaking at 3:30 GMT, and Fed Chair Janet Yellen speaking at 5:30 GMT. So that's quite late in the week after London already shut down for the weekend. And of course, we'll have tensions towards the French elections, the second round, which are held on Sunday. Okay, so that's quite a busy week, especially today, but also Friday, and we could have surprises on Thursday. And now for a special Fed preview. Here's Janet Yellen. You didn't expect me to be hawkish, did you? And that's my bias today. I expect the Fed to acknowledge reality, but let's talk about everything related. So let's begin from the basics. This Fed decision in May is a Fed decision that is not accompanied by a press conference, not accompanied by new forecasts, no dot plot. But the big question is what we'll have in June. A hint about the June decision, which is accompanied by all these things and should be more important, okay? So let's go back to March. March was an important meeting. We had the Fed raising rates. They telegraphed it very well. It was no surprise at the time. But they did not change the outlook. So what we had is that we had one rate hike in December 2015 after delaying it, after well preparing the markets. And then we had another one only in December 2016, again with big hints. So we had one rate hike, then we waited the whole year for another rate hike. And then after 3 months, we had another one, but no change to the outlook. They raised rates without saying, okay, the economy is getting better. We expect inflation to rise. We expect employment to reach full employment. Nothing. Just, it seemed like an opportunistic move to raise rates while stock markets were looking good, while the atmosphere was relatively calm. So that was perceived at the time as a dovish hike. The US dollar fell, but since then we had, I would say, cautious optimism from various Fed officials, from Yellen, from Fisher, from Dudley, from Brainard, from others, and basically the Fed sort of stayed out of the picture. They said we're probably going to raise rates 3 times in 2016. They stuck to the script. Sorry, 2017. Sorry, 2017, of course. But the big question is, well, will they move in June? How is the economy doing? So if we look at growth, it's weak. We know that Q1 was very poor with 0.7%. Annualized, the last non-farm payrolls was 98,000, half of what we got used to. And the Fed already may have the upcoming NFP data. So we have the jobs report coming out on Friday, but top officials, the President of the United States, Fed officials get the data earlier. So they might already have it. Other figures related to the past, of course, the hard data, retail sales, durable goods orders, they look soft. The soft data looks better, but it's also softening. So what's the soft data? These are surveys, consumer surveys, how are consumers feeling, and business surveys, the PMIs and the other ones. Okay, and they also look a bit softer, as we learned even this week with the manufacturing PMI. So here are 3 scenarios for the Fed. This is sort of the mainstream scenario, that the Fed remains data dependent. They turn it into a non-event. They do a copy-paste in the statement. Nothing new. Of course, they're not raising rates again, so it's not that kind of a copy-paste. But they're saying, we are waiting for more incoming data, for an update on GDP, for another non-farm payrolls that they'll get before the June decision. They'll show optimism about employment. That could give us a hint that this NFP will be better. But caution on inflation, because as we learned this week, inflation, the one that the Fed cares about, the core PCE price index, is at 1.6, and beforehand it was 1.8. Okay, so if they remain data dependent, the dollar goes nowhere fast. Of course, some choppiness, and this scenario, in my opinion, has a high probability. But just behind it, I would say medium to high probability, we have this scenario of a dovish Fed. Okay, the lower growth that we've seen so far in Q1 implies lower employment down the road, so at least a slower growth in jobs, lower inflation, as we're already beginning to see, and the Fed will express worries about employment and inflation, and markets will perceive it as a hint about no hike in June. If we have this kind of a scenario, if we have a more worried Federal Reserve, the dollar will fall. I would say this scenario is also realistic because the data is not so good. And last but not least, a scenario with low probability, but you never know, that they see the non-farm payrolls as just a blip. We had these kind of things in the past, one poor month, which was not reflective, which was only a one-off, okay? Because the data is choppy. And the growth, they expected to be revised higher, Q2 to be better. We had in the past week Q1, so there are exceptions, okay, in the past. So in general, they'll project optimism about inflation, about employment, and they'll be looking to hike in June. In this scenario, again, low probability, the dollar will rise. Okay, so to conclude this segment, the Fed, I believe, they'll not try to rock the boat, but the data looks weak. If they do rock the boat, I believe it'll be to the downside and not to the upside, cooling expectations about June, keeping all the options open, but I believe there's a chance they will look to the downside. Okay, and why am I looking to the downside? Also because of this chart. Okay, so for today, for the May decision, these are rate hike expectations, rate move expectations by the CME Fed Group, what bond markets are telling us. So for now, it's 95% chance that they'll keep rates unchanged. Okay, we all know that no change is expected. But for June, it's 67, even 70% chance that they'll raise rates according to bond markets. And I think it's way over the top. I think the chances are 50-50 or a bit below. And I think that today, there's a higher chance that they will cool down these kind of expectations. All right, so we did the Fed preview. Let's continue to the NFP preview. Actually, the NFP preview begins today because we might understand something from the Fed about what they know or don't know about the jobs report. But let's ignore what the Fed knows or doesn't know and talk about what we can expect. So again, last time it was very disappointing. Only 98,000 jobs gained. This will, of course, be revised. The revision we had last time was to the downside. Another disappointment. But wages were okay, 0.2 month over month, 2.7 year over year. And the unemployment rate continued dropping, 4.5. Okay, so sort of disappointing jobs growth, but are we closer to full employment? I don't know if you guys heard the term full employment. Full employment is, when everybody has a job or most people have a job. Those that aren't working are between jobs, genuinely between jobs, not the euphemism that is say about someone who's unemployed that he's between jobs. So if we have less people to hire, job growth slows down and wages rise as employers want to hire more employees. They can't find them, so they're trying to tempt them by paying higher wages. Are we there yet? I don't think so, because the participation rate is still low. If you compare it to other countries, it's 63 in the United States and around 65 in Canada, or 70% in New Zealand, for example, and comparing to other English-speaking rich countries. Okay, so not a very wild difference. The best comparison, of course, is Canada, the US neighbor. So if the participation rate is still low, that means that people are still on the sidelines and they might jump into the job market. So we're not in full employment. What are we expecting for this Friday's event? 194,000 jobs gained. Okay, so that's around double what we've seen last time, in line with the general trend of around 200,000. Wages up 0.3 month over month. These are both relatively high expectations, but we're expecting the unemployment rate to rise. How can it be with strong job gains and the rise in the unemployment rate? That is possible if we have more people, as I mentioned, jumping in the train and joining the workforce from the sidelines, from the ranks of the discouraged. Sorry, so we'll still have the Fed today, ADP today, and the ISM non-manufacturing also today to shape expectations for Friday. So these expectations might still change. How will the market react? Basically, it's straightforward. There is no bias for the dollar or against the dollar, and no important Fed decision soon. So it's not that this non-farm payrolls report is deterministic for a decision that is coming in a week or two. No, it'll come just after the Fed. Still enough time until the mid-June decision. The better reaction will probably be seen in dollar-yen, because we usually see the better reactions in dollar-yen rather than in euro-dollar. Euro-dollar specifically will look at opinion polls, very last opinion polls before the French elections. Low job growth could be compensated with strong wages. So if you have just a small rise in jobs, but we have wages pushing up, it'll reinforce the theory of full employment and will help the US dollar. So let's give a few examples. I think the highest wage growth we've seen recently was 2.8. So if we have 2.9, which is great news, and only 150,000 jobs gained instead of 200, that's good enough for the dollar to rise. If we have 3%, the very round number, which implies higher inflation down the road, only 100,000, again, the US dollar should rise. But if we have wages 2.5 and any small miss on jobs or even a small beat on jobs, the dollar should fall. In general, wages are equally important to job gains, okay? So that's it for the non-farm payrolls report. Again, a straightforward reaction is expected. Watch out for wages. And now for our currency of the week, euro-dollar, the world's most popular currency pair. We'll discuss 4 factors moving euro-dollar. First is the data and the ECB, rising inflation and the ECB. Second, the French elections, of course, it's coming up right now, the second round and final. Week US, then we'll move to the United States, also talking about the data first and the Fed, weak US growth and the Fed, and then we'll talk about politics. Donald Trump passed his first 100 days in office, so it's going to be 4 factors: economy and politics in both areas. Okay, so number 1, ECB and inflation. We just had an ECB decision. Let's talk about what happened and what we're looking forward. So Draghi was optimistic on growth, talked about diminishing downside risks, but more cautious on inflation. There's still need for accommodative monetary policy, and more importantly, they did not discuss any exit strategy. So the reaction to in euro-dollar was a mess, but eventually we stayed in the same place, and we're still at the same levels just before the ECB, just around 109. But then we learned that inflation is higher. As we mentioned at the beginning of the show, core inflation hit the highest levels since 2013, 1.2%. Other members, not Draghi, which is Dovish, they already want to talk about the exits. They want to talk about ending the QE program, which currently is expected to end at the end of this year, and they might taper it down or end it abruptly, and raising rates. The June meeting could be the turning point, when they stop talking about downside risks, when they begin discussing the exit strategy, okay? Needless to say, always, the central banks, more data is needed, more inflation data. We need to see if the move in, we've seen now the data for April, the 1.2% core inflation is not a one-off. But in general, the growing economy, we'll learn a bit more today, is now showing higher inflation, not only oil prices, but also other things. I would suspect, as the picture here hints, that house prices are on the rise. Okay, at least here in Spain, rent prices grew something like 15%, jumped 15% in the past year. And this phenomenon might be related to other countries. So watch out for that. And that's core inflation, not oil prices, which are much more volatile. Second topic out of 4, the French elections round 2. So Macron, here on the left, Emmanuel Macron, 39 years old, leading the polls by around 20%. He's a centrist, pro-European, pro-market, young and charismatic. And Le Pen on the right, extremist, racist, anti-Europe. She wants to leave the euro. She just yesterday she said that she wants to leave the euro in a matter of 6 to 8 months after she's elected. And needless to say, no euro without France. Undecideds in these polls, the polls show 60 against 40, a full 100%. They don't count for the undecideds, and some people are still undecided. Complacency among the supporters of Macron or supporters of other parties that probably vote Macron is problematic. They might not show up to vote, and the actual margin might be smaller. Okay, we've seen some erosion in Macron's lead, but it's still holding up 60 to 40, and that should be unsurmountable. So it should release some euro-dollar upside, as Ed asked beforehand. I believe we should see a bit move to the upside, but if we fall towards the elections on Friday, let's say if euro-dollar falls a bit, we might not see a new high, but in general, it should be positive for euro-dollar. We also could see 110, 112. A few opinions talk about that. I've published them on Forex Crunch. Anyway, but then we'll begin, of course, worrying about other issues. Elections for the French Parliament held in June. Macron can be president, but he needs to pass new laws, and he needs support in Parliament. Then we have elections in Germany in September, uncertainty about Italy, Greece. Things are looking okay in Greece, but you never know. In general, it's euro positive, but mostly priced in. In the shock event that Marine Le Pen wins, and after the first round, it seems less likely, but you never know. Euro-dollar, I believe, will fall below parity. It's the beginning of the end of the euro. Chaos with Brexit, again, highly unlikely, but very, totally not priced in. So we won't talk too much about that, but just take in mind, you never know the results until they're counted. Moving on, factor number 3 out of 4, weaker US growth. We mentioned this previously. Growth in the United States only 0.7, annualized the weakest in 3 years. It might be a seasonal event in some Q1s in the past. They have been slow, but not always. Underlying data is not so good. Retail sales, durable goods orders, investment, and also the soft data, as we mentioned, is softening. So businesses are a bit less confident. Consumers are a bit less confident, but still the level of confidence looks better than what people are really doing. Just a second. So anyway, employment lags growth. That's what I was worried about. So if employment lags growth, it means that we could have issues with the well, if growth is slow now, eventually it'll take time to show up in employment numbers, and that could be worrying for the Fed. Okay. Yeah, I see your comment by Ed. Like Trump was unlikely about the French elections, and I think here the gap is much bigger. Okay. I want to remind you that with Trump, it basically showed the polls of the polls. Okay, the aggregate polls showed Clinton leading Trump by 3.5%. Clinton really won in the popular vote by 2%. So the polls were wrong, but 1.5% is not such a big off the charts. So what the polls were telling us, and of course Trump became president because of the system, because of the electoral college. In France, there's no electoral college. It's just general popular vote, and it's not a small gap of 3.5%. It's 20%. Again, with the undecideds, it might be smaller. I think there is a smaller chance. One thing I would note that today we have a debate tonight between the candidates, between Macron and Le Pen. If Macron's performance is a disaster and Le Pen has a really great one, then we can begin warring. But I'm not sure that even if Le Pen gains ground and Macron loses ground, that there's enough time and enough people ready to come out and vote for Le Pen, and enough people to come out and not vote for Macron. So, of course, you never know until the votes are counted, but the chances are much lower. Also, with Brexit, it was very close. Okay, the Leave campaign was behind, and they eventually won, but it was very, very close. Okay, continuing with our with the US, again, growth is weak, employment lags growth. But there's also reasons for hope, for optimism. The Atlanta Fed sees a bounce in Q2. They now project 4.3%. I think it's very, very optimistic. But in general, a more balanced dollar, not so strong dollar can help exports. So maybe, I don't know. And there are reasons for hope. In general, the situation points to a lower dollar because of lower growth. And our fourth factor is the president, Donald Trump. He signed a lot of executive orders, also seen here in the picture. 100 days have passed. Initially, he did a lot with these orders, but he did little on the economic front. We still don't know what's next in terms of the big tickets. Markets care about three things: infrastructure, taxes, and trade. So infrastructure, he talked about the $1 trillion investment plan. Both private and public, so not all of it is really spending directly from the government. So far, we haven't seen anything of substance. We had a budget deal on the government shutdown, averting government shutdown, and we haven't seen anything infrastructure related. So far, absolutely nothing. Nothing to talk about. Basically, a big disappointment on that front. We knew that Republicans were not really in favor of more infrastructure spending, but he could have struck a deal with Democrats and with some moderate Republicans. But anyway, nothing happened. On taxes, so last week we did learn about a very bold plan to cut the corporation tax to 15% and some other ideas, okay? But it was only one page without details, and that came after 100 days in office and 70 days in transition. All they managed to do is produce one page. It seems very, very unprofessional, to put it mildly, amateur. And we already heard from Congress, from Republicans, from the majority, that they're not really taking it that seriously. So there are some ideas, but so far, no change. And trade, here we did see that, well, in the first week, Trump took the United States out of the TPP agreement, so he fulfilled his campaign promise. But that was anyway problematic, and also Hillary Clinton was against that. He was relatively cool on NAFTA. So here is President Trump with Canadian Prime Minister Trudeau. They had a great start to the meetings, but towards the 100 days mark, Trump decided to pick up a fight with Trudeau about timber, lumber, softwood, dairy products, but hopefully things should calm down. So far, I would say that, well, Trump, they're staying in NAFTA at the moment. Anyway, Trump and China, he said he would label China as a currency manipulator on day one. That did not happen. He has cooperation with North Korea on, cooperation with China and North Korea. And well, China also did a gesture by holding up Trump's trademarks in China. Chinese courts ruled in favor of the Trump brand. We cannot say that's unrelated to a warming relationship. They had a good meeting, President Xi Jinping of China and President Trump. So far, it's no damage, better than expected. So on the trade front, again, TPP is gone, but China and NAFTA, things are looking okay over there. And what about the dollar? So I would say that so far, after 100 days, the administration hasn't been a disaster for the US dollar, again, not destroying trade. And but on the other hand, hopes were too high. Hopes were too high for infrastructure. Hopes were too high for cutting taxes. And now we're cooling down. Trump is less important to the dollar than he used to be. The Fed remains important. The economy remains important. I would say the bias here is to the downside, okay? Biggest manipulator is Japan, but it suits the USA. Yeah, the Bank of Japan is printing so much money. We do hear some noises from the US against Japan, at least the previous administration. The Obama administration talked about that, but it was not that strong. Switzerland is manipulating its currency out in the open, and the USA is quiet about that. So, well, you can understand why, I guess. Anyway, Donald Trump so far is not helping the US dollar. We had a big move in late 2016, and now things are not looking that strong. And before we move to the preview for next week, let's look at the euro-dollar chart to conclude this segment. Currently 109.20, resistance 109.50, further resistance 110, 110.40, 111.20, and 113. To the downside, we have 108.20, 107.75, 107.20, and further much lower 104.90. Okay. That was our euro-dollar segment. Now, preview for the week. The second week of May, week that begins on May 8th to May 12th. So on Monday, we'll have election echoes from France and also NFP echoes, right? So a bit of reaction to the things that happened this week. Then we have Chinese trade balance as well, important especially for the Australian dollar. On Tuesday, we have again more of Australian retail sales and the US job openings, which is another figure that the Fed watches for jobs. Things get a bit busier on Wednesday with, more events and inflation data from China, the oil inventories. Let's see if oil prices break 47 at one point, WTI, and a rate decision in New Zealand. They are not expected to change interest rates, but perhaps they'll be a bit more optimistic after that great jobs report from New Zealand. On Thursday next week, we have UK industrial output and trade balance, and we have Super Thursday from the Bank of England. We'll preview that next week in the show, but in general, this is a more important meeting of the Bank of England because they also released their quarterly inflation report. On the other hand, it comes before the elections, and they'll try not to rock the boat too much a month before the elections. And in the United States, we have producer price index and jobless claims. The big figures come on Friday. German GDP, most important economy, biggest economy in Europe. And then we have retail sales and inflation at 2:30 from the UK, and before we have consumer confidence. So a big focus on the US consumer. These are already figures for the month of April for Q2. Let's see if the economy really picks up as many expect in Q2, or it stays depressed as we've seen it in Q1. Okay, so definitely a lighter week than this week. This week is much busier with the Fed and non-farm payrolls, but we'll have echoes to this week, and we do have towards the end of the week top-tier events from the United States of America. Okay. Cover a lot of stuff, and it's time to wrap up the show. So this is the wrap up for the live market open on May 3rd. Very busy week in markets. The big events to wrap up: the United States government averted a shutdown on Trump's 100-day birthday in office. Lots of tension towards today's Fed decision and Friday's non-farm payrolls. The Fed is not expected to change interest rates. No forecasts, nothing, but maybe they'll give us a hint about June. Mainstream scenario, they will not do anything, sort of continue with the data-dependent message. Nothing, in this case, nothing will happen with the dollar. But if they do change their tone, it'll probably be to the downside because figures have been quite poor. And if we have a hint about no hike in June, that'll be against what markets are expecting at the moment, and the dollar could fall. So I think it's asymmetric, more downside risk. Okay, optimism towards the French elections. For a Macron win, we have the last debate tonight. It's a 20% lead. Looks insurmountable, but you never know. Brexit always an issue, but remember that everything Brexit related is also related to the elections in the UK coming up on June 8th. And some worries about China, also worries about the United States, especially with GDP missing expectations, growing at the slowest rate in 3 years. Other figures have also been weak. Hard data for the past and soft data for the future. Elsewhere in Europe, things are looking better with higher inflation, higher growth. We'll get growth figures later today. And well, across the world, things are a bit mixed. The big events for today, well, the ADP non-farm payroll is a big hint. For the NFP, even though last month it wasn't that correct, the ISM non-manufacturing PMI, the services sector, is about 75% of the US economy. And the Fed decision, again, no changes expected. If we'll have a change in tone, it might be to the downside. Tomorrow, we have the services PMI from the UK, the most important one for the UK. Some figures, trade balance, factory orders from the US, not the most important ones. And maybe we'll hear something from Draghi reacting to higher growth, reacting to higher inflation. And on Friday is, of course, jobs day, non-farm payrolls. 200,000 jobs are expected. And I would say, and watch out also for Yelen's speech. And for those trading the Canadian dollar, watch out because we also have the Canadian jobs report, which was beating expectations in recent weeks. Question here by Jax: which pairs to watch today? I would stick with euro dollar, our currency of the week. Just so many things happening, and I think now it's sort of a spring, like a spring, very tight spring that is waiting to explode. My bias with euro dollar is to the upside. The debate tonight, all the hints towards the non-farm payrolls, and things going on. Also, more opinion polls. We have the opinion weight poll at 10 GMT. We have the IFOP poll at 4 GMT regarding the French elections. Just so many things going on towards related to euro dollar. Well, we have the construction PMI today, but afterwards it's all well, euro dollar related, I would say. Okay, yeah. So, and let's look at the quick look at the charts. Of course, beginning with euro dollar in this wrap up, 109.60 and. Sorry, 109.50 level to watch, 110, 110.40, 111.20, and to the downside 108.70, 108.20, and 107.75. Big weekend gap hasn't been closed on euro dollar. Pound dollar, we're currently at 129.29. Okay, looking towards the upside, getting closer to 130, above 130. If we have a break, 130.50, 131.30 to the downside. 127.70, the post election announcement low. Dollar yen, less risk with less worries about France and the government shutdown. Moving up 112.20, resistance 113, 114 to the upside. To the downside, of course, 110, 108.10. The bottom there, we have sort of this bowl shape, this V shape. Dollar CAD, this is quite a remarkable rise here. 138, 138.50 are the levels to watch to the upside, 136.40 and 136 to the downside. Aussie dollar not going anywhere fast, always remaining close to 75, 74.40 to 75.60 is the current range. And Kiwi dollar got a bounce to the upside after moving lower, so we're getting close to 70, but not there yet. 69.70 first resistance, followed by 70.40, 70.90, and 71.20. All in all, we're seeing some moves to the upside. Well, euro dollar, dollar yen, not necessarily dollar favorable, not necessarily against the dollar, but tonight we'll have hopefully bigger moves around the US dollar with all the news coming out. Okay, so that's it for our show for today. Thank you very much for coming. I wish everybody a safe and successful day in the markets. Talking about the Fed, we'll have a special coverage. You're all welcome to join. It'll be Valeria Bednarek back from her vacation, Mauricio Carrillo, and myself. So that's it. So I hope to see you later If not today, then next week, as usual, every Wednesday, 7 GMT, I'm here. So that's it. Thank you, and bye-bye.